Welcome to the TrustleBridge Capital Market and Economic Recap for February 2025. I'm your host, Eric Jefferson, managing partner with TrustleBridge. A lot to talk about today. As we indicated at the beginning of the year, one theme we would likely expect heightened volatility. Thus far, month of January and early trading in February, not disappointed. Of course, over the weekend, received headlines that tariffs would be going in place. Not surprisingly, markets started the week trading much sharply lower. I'm going to spend a few minutes quickly recapping what exactly those look like, as well how they tie into our overall outlook and theme for the market ahead. When you think about what they were relative to the Trump 1.0 tariffs, this was 25% on goods from Canada and Mexico, as well as 10% on China. And again, in comparison, represents a much larger package. The Trump 1.0 tariffs that were primarily aimed at China impacted a figure of about $380 billion. This go round, at least if the tariffs were to stand as is, would target a figure closer to 1.4 trillion. Additionally, you think about the role of tariffs, you think about who you use them against. Obviously, this go round incorporates or directly affects not only two of our largest trading partners, but two of our allies, also those that we share a border with. We think about some of the likely impacts. First and foremost, autos. That's a sector you're likely going to hear a lot of. Stat I heard today that a car throughout the manufacturing process may cross the US-Mexican border up to 8 times before it's finally finished. Obviously, more tariffs there directly impact the end cost those vehicles would have to sell for. And not surprisingly, autos down very sharply in early trading as they have razor-thin margins to begin with. Another one, food. We think a lot of food imported from Mexico. You think about avocados if you're looking to make guacamole for the Super Bowl. Certainly any beverages you may enjoy alongside them as well. And then lastly, if home prices weren't high enough already, about 25% of materials for new home construction is historically imported. Again, generally speaking, those costs then get passed along to the consumer, making home prices that much higher, again, if these tariffs were to stand. Now, we take a step back, we look at the actual language that came surrounding them. There was an emphasis on immigration as well, looking to control the flow of fentanyl. That does make me wonder if this is more of a negotiating tactic as opposed to something that is likely set in stone for the foreseeable future. Obviously, President Trump does have a track record of wanting to negotiate. That's led many in our industry viewing these as somewhat temporary. Obviously, though, if they were to stand, do represent a very meaningful shock. When you think about the cost of goods that would ultimately be passed along to our consumers, as well as the impact they would have with our regional allies. Not surprisingly, stocks were down sharply. Granted, they have recovered in the first few hours of trading. The Canadian and Mexican stock market hit much harder. And interestingly enough, yields in the bond market have actually come down, not necessarily the impact you would have expected. Again, if the concern are higher prices now being passed along to consumers, that would have an inflationary component to it. Now, we take a step back. Again, this is all in early trading in the month of February. As we rounded out the month of January, a lot of volatility last week due to DeepSeek. That was a Chinese AI company that came out and suggested it had a large language model very similar to that of the ChatGPTs of the world that could be operated and run at a much lower cost. Again, still have more research to do on that. Certainly, though, if those suggestions are in fact true, obviously that would represent some competition to NVIDIA. Now, granted, NVIDIA will also make some very sophisticated chips that are not in comparison versus DeepSeek. That being said, again, if we think about the open AI, the open language model, where this would be a potential competitor, as much as that would presumably take some market share away from NVIDIA and have a negative impact on their stock price, All else being equal, that would likely be a net benefit to the other 499 companies in the S&P 500. Again, NVIDIA's makes those semiconductor chips that are incredibly sophisticated, are also incredibly expensive. That represents a cost for all the other companies looking to pay for that technology and then incorporate on their own. As we round out end of trading last month, we also had a Fed meeting thrown in there. As expected, no rate cuts. Powell, indicated something they are continuing to monitor. Usually, that can be a very significant or very volatile day. With everything else going on, it seemed like just another meeting, status quo there. So, all of this to say, we think the macro backdrop, certainly is one that has had some softening. The end of the day, though, two things that drive stocks are earnings and economic growth. Both of those still look solid. Now, some of the other factors helping support stocks may be the case, not as strong. Conversely, some of the headwinds have increased strengths if these tariffs were in fact to stay. But at the end of the day, that's something, just as everyone else, will have to continue, wait and see what exactly the final version of those tariffs look like, and ultimately then assess what impact that will likely have on our economy. That's all for this month. As always, appreciate you taking the time to join us. Please don't hesitate. Reach out if you have any questions. Take care.